Today is Tuesday, December the 17th, 8 more days until Christmas. But that's not what we're here to talk about. The market, look at the volume. Same as yesterday in the Dow, NASDAQ, typical average volume, S&P, about the same as yesterday, a little bit lower than 20-day average. Advancers led decliners, not by as big a margin as yesterday. But I think the story is how the market dropped off in the afternoon instead of trying to keep most of this gain. And we'll see it in a lot of the stocks that we're looking at. But the market breadth indicator now is going to take a little bit of a move up towards this overbought line, but it won't quite hit it as it did here and here and here and here. And every time that it did, money moved out of the market, enough to change the average. So just be aware of that. The S&P ended up only up 1 point. They say it made a new high. Virtually impossible to tell here. I guess if I'd drawn this more carefully and put it down on the top of that candle yesterday, we'd have seen a difference. But apparently we have made a new high because we were up 1 point today. Apple finished with this doji candle and did not make, had a higher high, but did not, yes, and did make a higher closing high. So that is significant again. And Apple continues, I believe, to be headed towards 161.8%, 288.80. All of this is predicted on Trump actually signing the phase 1 deal, but that will be sometime in January, or not saying anything stupid between now and then, which could make the market think that he will renege and not sign it. He's capable of doing anything. Caterpillar, up 93 cents, but the SMIs here are telling us that Caterpillar is on the downward slope in terms of momentum for the long term. Still a little bit more momentum left in the short term, but on the long term, from this point here, where we had a short-term high, actually from this point here where we had a short-term high, and our long-term plateaued, and then we took this downward move, less of a move up, a little bit more, slightly more down, a little bit higher, but nonetheless, this all contributes to a stochastic momentum index based on 40 days, starting to tail off. Volume has been decreasing. Home Depot had a nice little pop. Unfortunately, gave up a lot of it. But the story here is also in the stochastic momentum indicator, which turned around over the last few days, and so did the long term, and it's continuing its move back upwards. If you need information on how to plot these on your charts with either Thinkorswim or MotiveWave, let me know in the comments down below, and I'll send you some video links on how to do that. But this is a nice move for Home Depot, and it may soon be time to double down and add some more vertical calls. And I'm going to be doing vertical calls or vertical puts from now to the foreseeable future instead of buying stock, because I want to contain my risk and identify my risk with each trade. AT&T down just 9 cents, but we had said back here that after this candle we expected it to use the AT&T to use the cloud as a test for support, and that is exactly what happened. Now we've had the cloud being a test of support once, 2, 3, 4, 5, 6 times. So AT&T should continue to move up. We do have a flat cloud here, which means that it could come over the cloud and come down and touch the cloud some point in the future. But if it breaks 68.1%, and you see this glimmer of hope, this yellow at this side, what we could see is it simply jumping over the flat cloud and going from one peak to the other. that's something that's quite common. WDC, I pointed this out on Twitter today. We've got this big gap that we were unable to penetrate yesterday, unable to maintain penetration today as well. We also have a gap below that we tested today and found a perfect bounce or support off it. But what we have now in the stochastic momentum indicators is the short term moving up and the longer term moving up, but the short term plateauing and starting to come down. So what we can see here, let's go back and look at what that means. Here's an example of how the long-term indicator went up to signal that the stock was in an upward move. But we saw the short-term indicator jag, move up, come down, move up, come down, and then go up before signaling both the short-term and long-term starting to say to move out of the stock. So on a short-term basis, we could see some movement in between these two gaps, and the chance to buy long vertical calls on WDC will come after we've had a reversal in the short term. So I'm going to take, whoops, that's not what I wanted to do. I'm just going to take and draw an arrow right here because this is what we want to watch. Tomorrow we want to watch this. And if it goes down, wonderful. That's what we were hoping to see. And we're waiting for a bounce off the top of this cloud as an opportunity to buy long vertical calls in WDC. Whirlpool down 245, much the same as WDC, except it has already started its stochastic movement index down, while the short-term down, long-term is moving up. This is all good stuff. Let's wait until we see a reverse of the short-term momentum indicator till it comes down and comes back up again, and then we'll get a resumption in the long term, and that will be the point at which we buy vertical calls in Whirlpool. Amazon up $20 today in terms of percentage. That was 1.15%, far better than the market. So that's a really good sign. And look at the Chiku span here, pushing right above the candles, above the 80 EMA. The Chiku span is headed towards a rendezvous with the 200, and price is also heading to a rendezvous with the 200. So that's it. Where are we going? I think we're going a little bit higher tomorrow, cautiously higher, because the McClellan oscillator is not yet at the overbought line. It will just be somewhere between yesterday and the overbought line when we look at it later on tonight.